Hey everyone, welcome and welcome back to my channel once again. This is Abhishek, your friend but not a financial advisor, and today's topic is the next Amazon, as the title says, and this stock can be one of the best growth stocks for 2021 and beyond. So without further ado, let's just get started. But before we jump onto the main content, guys, just a small request. Please hit that like button. Just takes a click and it really helps the YouTube algorithm and supports the channel. And if you haven't subscribed to the channel yet, then what are you waiting for? The red button is there right in front of you. Just smash it and be the part of an amazing family. And apart from that, guys, just to let you guys know that we do discuss such growth stocks, such amazing stocks early on our Patreon's community where we have fun. We are making investment fun and not stressful. So if you are looking forward to join such an amazing family, then the link would be in the description down below. Just have a look at it and you're always welcome. So now let's talk about our amazing growth stock for 2021. So guys, the company which we're going to talk about was one of the biggest IPOs in the year 2021. It is an e-commerce giant, and that's the reason why I am calling this company as the next Amazon, or let's say the next South Korean Amazon for sure. So the company which you're talking about is Coupang. Yes guys, this South Korean e-commerce giant, or the next Amazon, or at least the next South Korean Amazon, was IPO'd in 2021. But the company is not that new. The company actually started back in 2010 and is considered to be equivalent of Amazon. That's why the title Next Amazon, DoorDash and Instacart in just one company, and is growing at a rate of 90% a year. We will get onto the numbers later in this video as well, but just to highlight this point so that you do know that this is a really good growth company, and it's been sought after every major e-commerce company, especially in South Korea. And of course, it's always important to know as an investor the person behind the idea, behind the business. So Bom Kim, who is the founder of this e-commerce giant Coupang, actually mimicked the US-based Amazon. That's why I'm repeating again. That's why I call this business as the next Amazon, and was able to make Coupang as a disruptive South Korean's online retail space by slashing the prices. We will get onto that topic as well, and investing heavily in swift deliveries. And this is one of the bullish point of this particular company. Now in November 2018, he was able to raise $2 billion from SoftBank's Vision Fund at a $9 billion valuation, making Coupang Korea's most valuable privately held startup. Then in March 2021, Kim took Coupang publicly on the New York Stock Exchange, like we already know, marking the biggest listing of an Asian company since Alibaba in 2014. So Coupang's e-commerce site in Korea is ranked second in terms of transaction volume only after Gmarket, and this proves that everybody in South Korea, including the expats, love to shop on Coupang via its easy to use, one click away interface. And this is also possible because of Coupang's innovative technologies and creative approaches to mobile e-commerce. And that's why they have made themselves possible to become an amazing growth company. I mean, look at the numbers, guys. Since 2018, they have already shown a 4x growth. And just since last year, they have shown a 90% year-over-year growth. And I'm sure that this will just continue to rise. Why? Well, because we might think that the pandemic actually helped Coupang to get those numbers, to achieve those numbers, but that's not the reason in South Korea especially. So this is a statistical chart from 2019, yes, pre-pandemic, and you can see that South Koreans actually prefer online shopping rather than going to a physical shop because of the most common reasons is convenience and good value, and Coupang is definitely giving a good value and convenience, and we'll get onto that just in a moment. And guys, this is one of the important aspects and the key factors which is actually helping Coupang a lot and other e-commerce businesses, especially Coupang, because of their fast delivery, rocket deliveries services, because Koreans are known for a busy lifestyle, and that doesn't lend itself to things like in store shopping as readily as it does in the United States. And if you look at things like mobile phone penetration, where 96% of the Koreans uses smartphones, 40% of the Koreans order groceries online, it gets a bigger market opportunity that you may assume. Trust me, guys. And if you are looking at the market from an outside perspective, it's a very technology enabled, very busy lifestyle for which Coupang has invented. and this gives Coupang a lead over other e-commerce competitors. So as you can see right here, one of the main reasons why people shop online even though close by shop could offer an item right away are because of discounts and convenience. Guys, convenience is a keyword especially related to Coupang, and we'll get onto that in a moment. According to a survey by Korea Internet and Security Agency, PC and mobile shoppers' preferred payment method is credit card, accounting for 72.4% of PC and 68.1% of mobile shoppers. And guys, that's why I don't think in any way that this growth for Coupang will slow down, especially in South Korea. So guys, if you combine all these aspects of Amazon and Shopify, you get Coupang. So Coupang has differentiated itself by owning its entire logistics and delivery systems. They have fulfillment offerings not dissimilar to Amazon fulfillment. Now they have also storefronts that they provide for business, which isn't dissimilar to say Shopify. Yeah, and lots of integration here on the e-commerce side. But what is different about Coupang versus other key players in the Korean e-commerce business is that they own their own inventory for the most part. What this means that they have inventory sitting on their balance sheets. They have responsibility for pushing that through. But it also means that since they are directly negotiating with the manufacturers of these items, what they are selling, they are able to do it for a much lower price on a lot of these goods and move them extremely quickly. And guys, this brings us to our another really amazing bullish point regarding Coupang's infrastructure and services. And this is what I was talking about, convenience. Having 70% of Koreans living within 7 miles of the Coupang logistics center means that Coupang, in the Korean market at least, is able to quickly surpass the delivery speed of many of its competitors. The other thing that it's very interesting about being within 7 miles of 70% of Koreans is simply that this is a different type of delivery structure than Amazon. So when I say this is the next Amazon, I mean that this could be better than Amazon in Korea, in South Korea. So which can't approximate the same proximity to customers because the US is such a large country, yeah, and South Korea on the other hand is a fraction of the size of the US, and having built this supply chain to customers first, and this gives them end-to-end integration benefit. And guys, this is another really huge bullish point which is worth noticing for all the investors, which has transformed the e-commerce industry, at least in South Korea, and has been introduced by Coupang, which is their dawn delivery services. Dawn delivery services means that they give the customers to have an access to convenience stores, but millions of items within just a span of hours. So the customers can actually order the product before midnight and they will find the product by early dawn. And this gives their customers to have such a convenience over the product deliveries. So the customer actually has the convenience to get their product at their doorstep. And guys, I'm not done yet. The other best part about this service, about the dawn delivery services, is the return procedure. The return procedure is as fast as their delivery services. All the customer have to do is just put back the product at their doorstep and contact Coupang. Then Coupang delivery guy or takeaway guy will just come, collect the product, of course read the barcode, and as soon as the barcode is read by the guy, by the Coupang service guy, your money will be returned at the same moment of time. Okay, the transaction might take time, but the process starts at the same moment as soon as the barcode is read. And guys, the product doesn't have to be even in the original packaging. This is another really good factor. The product can be just naked, unpacked at the doorstep with the barcode, and the barcode should be readable. That's it. And that's how they have made this free return a stress-free return for their customers. And guys, this is an amazing bullish point, and such services are really helping the business to grow. And guys, of course, they have made it possible because of their vast logistics network with more than 15,000 full-time drivers, and over 70% of the Korean population lives within 7 miles of Coupang logistics center. And this is a really, let's say, a positive factor which is helping Coupang to achieve their goals. And guys, Coupang is giving such amazing services at a monthly subscription of just $2.6. It's quite cheap as compared to Amazon Prime with $8, and 4.2 million of Coupang users are actually subscribed with this subscription plan. So guys, as we already saw now that Coupang's flywheel or business model is quite similar to Amazon's flywheel or business model. They have low prices, they have amazing efficient delivery systems like Amazon Prime. Okay, Coupang on the other hand is doing quite amazingly well compared to Amazon Prime. I mean, I don't think Amazon Prime can achieve such dawn deliveries and such packaging systems because of vast diversity and stuff like that. But anyways, before we jump on to further details, let's have a quick look at the company's financials because that's quite important to look at. Okay guys, so now let's have a quick look at the income statement first. So as we can see right here that the revenue has been increasing steadily, and from 2019 till 2020 it just took off, so a 90% year-over-year growth. Now it's probably easy to say, and a lot of people can draw some conclusions about how their performance may have been over the past year as a result of pandemic. And I would say that yes, it's pretty much the case, as Coupang actually did a stellar year in 2020. They had 90% net revenue growth, as we can see right here, to nearly $12 billion. Now, apart from that, what is worth noticing is their operating income, or let's say operating loss. Their operating loss, on the other hand, is also decreasing. This is the point which is quite important to know, because their margins are not that good and they would have to work on the margins. So as we can see, if we go down, we can see that their operating margin is of course minus 4.4%. But guys, this is what is worth noticing. If pandemic was really helping the business, I still don't think that that could really affect the margins so much. Just look at it. From minus 26% to minus 10.3% to minus 4.4%. I mean, this is an incredible improvement in the operating margin. And as we can see right here, of course, their gross margin should be in positive. So yeah, we can see right here that their gross margin is of course 16.6%, which is quite an amazing margin, to be honest. They just have to work a bit on their margins, as we can also see that their EBITDA margin is minus 0.7%, but you can see that it's already almost coming onto a positive number, above 1, which is quite a good sign. So that's all for the income statement. So as just to summarize this, guys, this is a good income statement. I mean, they're definitely improving. Okay guys, so from the income statement, we already saw that Coupang is actually in loss. So the company is making an operating loss of around $500 million. So the company is still losing money. But what is important for me as an investor is how the company is actually generating cash. What is the free cash flow for the company at this particular moment of time? Because this was a really vital point for Amazon as well, for the self-growth of Amazon, and Amazon was able to generate large amounts of cash. So this is what is important for me to see for Coupang as well, since we are comparing Coupang with Amazon. So as we can see right here, the net cash flow actually improved a lot. And of course, we can imagine that the IPO actually might have helped Coupang, but IPO actually happened in 2021. So this is the free cash flow statement before the IPO. So we can say that IPO in this case didn't help. So this is the cash flow purely from the business operations. And this is what is really attractive for me as an investor. Of course, now the IPO will definitely help the company. The company being on the publicly traded platform will definitely bring in some more cash, which is quite an amazing thing for the company itself. But guys, you have to remember, so this is the free cash flow, as we can see, was quite low, $440,000, $630,000, and suddenly $29 million. So what was the difference between early stages and now? Of course, guys, we have to know that the free cash flow was consumed in early years to build up this huge logistics centers. So we have to know that Coupang has their own logistics centers, which is actually a good bullish point. So of course, the cash flow was consumed to build up these logistics centers to do this dawn deliveries, fast deliveries and everything. And this was an early investment and the cash flow was consumed at this stage. Now, they are very well-funded company. Now they built up the whole infrastructure, and now they will be benefiting by being a publicly traded company. So you see the pattern, it's amazing. They have got shares So a lot of investment now is already there. They just have to maintain it. Yeah, of course, now I'm not saying that they won't be expenses. Of course, there will be expenses for business operations and also for maintaining these investments like trucks, their delivery trucks, maintaining the logistics centers, building out more logistics centers, constantly optimizing the supply chain operations and blah, blah, blah. So this is quite a capital intensive business, but yes, the main thing is done. The heavy lifting is done, and this is what makes me more bullish at Coupang. So guys, one more important factor to be considered regarding their balance sheet. So we can see that their inventory actually increased from $632 million to $1.16 billion, which is actually nothing to worry about because in times of pandemic, inventory can increase. Their total current assets are sitting at $2.8 billion as compared to their total current liabilities, which is more than the total current assets. So this is quite not that good, but it's not that dramatic as well. So the total assets are sitting at $5.06 billion, while the total liabilities are also higher than the total assets. Okay, so this is something not that good, but nothing to worry about. So we can also see that their accounts payable actually increased from $1.5 billion to $2.9 billion. So it jumped. But I would say like this is like a dressing before the IPO, you know. So they have to keep some cash on the balance sheet to look good before the IPO. And it was around $1.2 billion. So we can see that their working capital is deteriorating so rapidly over the past year. But you also have to remember that they raised a $4 billion odd in this IPO. Yeah. So they are literally flushed with cash. So if you see just one aspect, then of course you will be worried. But if you see the other aspect as well, then it really helps. So as you can see right here that over the years, net loss has been decreasing for Coupang. So since we are comparing Coupang with Amazon, let's rewind back to 2002 and let's have a quick look at Amazon. So back in 2002, Amazon had done $100 million level free cash flow, which was pretty outstanding, yeah? They also did $174 million in operating cash flows and spent $39 million in capital expenditures. So naturally, free cash flow was positive. But you also have to remember that they also had billions of dollars in long-term debt. I think over $2.2 billion of long-term debt at the end of the year, and had only done $3.1 billion in sales. So they were actually losing money in terms of operating income. So despite of generating a lot of cash, the income statement looked a little bit worse as compared to Coupang. At the time, taking an average stock price of Amazon over the course of 2002, looking at their financial performance over 2001, it traded at an average price to sales ratio of around 4 times during this year. And now if you compare that Coupang as it exists today, Coupang did negative $200 million of free cash flow. So significantly less free cash flow, but it made $300 million in operating cash flow, nearly double that of Amazon, and spent nearly $500 million in capital expenditure. So this is getting back to knowing the strategy of Coupang versus Amazon. So Coupang came into the market much later than Amazon, has invested millions and millions of dollars, hundreds of millions of dollars into the building out technology and infrastructure and logistics that are unmatched by even big giants like Amazon today. And this is what really is impressive for me, that Coupang, even though coming so late, has such an amazing infrastructure and services that even Amazon Prime, Amazon services cannot match Coupang's style. And guys, considering their market dominance in the field, when you just look at 8 years into the business themselves, and when you consider the fact that Amazon is growing about 20% over this time period versus 90% for Coupang, on a relative basic level, let's say, Coupang actually looks cheaper than Amazon did in 2002. Even if you back out the sales as they had in 2020, because 2020 was a weird year, let's say for pandemic, they got much more sales. Coupang still grew 55% in 2019. So even if you look back pre-pandemic levels, Coupang is still on a relative basis to Amazon in 2002. So guys, when we are looking into a business for a long-term investment purpose, we have to look into the business that who are the investors who are actually also believing in this particular business. And as we can see right here, that Coupang is actually backed up by SoftBank. SoftBank has invested $2 billion in this IPO. And that means that they do have enough confidence to take this business to the next level. Okay guys, now quickly just to cover up my strategy, what I would be doing with Coupang. But guys, before that, just want to remind you that I am not a financial advisor. This is just my personal opinion. So as we can see right here, that Coupang actually opened up pretty high at $50 after the IPO, and then it came sliding down, which we have noticed before with other IPOs as well. So now since few days, it has come back up to pretty decent levels at $47 a share, but I still don't think that this is quite a good entry point. According to me, it's quite a bit overvalued, and that's why I would be waiting at around $45 or $42, to be honest, at this level right here. And then if it comes below at $40, then I would definitely jump into this stock and open up an aggressive position. But for now, my entry point would be somewhere around $45 to $42. I wouldn't jump into this company at this price. So that's my opinion, guys. Now let's summarize what we actually covered in this particular video. Okay guys, so now just to summarize the key points what we covered in this video. So Coupang of course has an amazing revenue growth year over year, especially from year 2019 till 2020, a growth of 90%, which was phenomenal. Whatever the reason might be, pandemic, but it is a phenomenal growth. And their chances of entering into a $530 billion market and getting a good chunk of this market is pretty high because of their unique business idea with end-to-end integration. And with this special service and special integration method, they can of course also enter globally. That would be a huge step. Apart from that, what worries me are their margins. Margins play a key important role in a particular business. And these are the factors which actually helps to reform a business, because with such an amazing revenue for Coupang, their margins should have been a bit better. And this leads us to another worry for us, which is their cash flow. So they are having problems in generating positive cash flow, as we can see. Though the price to sales ratio is quite decent compared to its competitors, but still I would say that they do have to work on their margins, and they should be definitely working on their positive cash flow and investing the money which they will generate from the stock market back into the business. So guys, all in all, I do think Coupang can be a really good growth stock and a long-term hold value investment, especially if they can continue with this level of growth even post-pandemic. Now, that's why I would be definitely opening up a small position at these levels, at this valuation. And like I said, this would be a really small position in the beginning, because I do think that it's a bit on the overvalued side. And then if it drops below $40, I would be adding up more positions into Coupang. The main reason for me adding up Coupang into my portfolio would be to get a small exposure of South Korean as emerging e-commerce market. Plus, I do think that in 2 to 5 years or more than 5 years, this stock can definitely touch $100. That's it guys, that's all for Coupang. So that's it guys, that's all for today. Thanks a lot for watching. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.